the management of HPCL. Who better than MK Surana, CMD, to answer a few questions on which way the oil and gas business is headed. Mr. Surana, morning. HPCL and BPCL have approximately similar PBT numbers, but the market cap of HPCL is 1/3 that of BPCL. Do you see value unlocking potential existing in HPCL? And you would, appreciate our curiosity. It all comes under the backdrop of the BPCL disinvestment.
No, actually the market cap also depends on the number of shares which are there in the market. I think earlier they had one additional bonus issue long time back, which we caught up subsequently. But they also got a NRL and Cochin refinery. So there are some additional refineries which they have that may be adding to the market cap. Of course, added by the current disinvestment news on them, which may be driving the market. Otherwise, both have got the equally good potential. So I don't think that is the reason. And in the past, the market has shown that number of times.
Mr. Surana, the street sees so much value in your assets. How do you think that it can be unlocked in a proper way and one can ensure that the street gives you higher value?
Of course, it is difficult to predict how the stock market behaves, but I agree with you that as far as the scripts are concerned, there is a lot of value. And slowly and gradually, the market will realize that. Of course, if you remember, our own HPCL share had touched 184 once upon a time. Then it retracted back. So it also moves something to do with the market, something to do with the way the news on the oil sector moves. So there is a combination of the factor, but no denial of the fact that there is a tremendous value in these stocks, and which I had said a number of times in the past that the stocks of OMCs are difficult to value, in fact.
Okay, so let's talk about what is in your control. Market cap, stock market valuation, you can't change that. That's the perception and that is liquidity. What is in your control is how efficiently your refineries are working and what realizations you are commanding at your fuel retail business. How has the slowdown impacted your diesel sales?
Yes, so first, to answer your first question, what you are saying is absolutely correct, that what is in our control is the physical performance, the operational efficiencies, the logistic efficiencies, the energy efficiencies, and that is what we try to achieve, and that's what HPCL has consistently demonstrated. The higher and higher crude throughput, capacity utilization, operational efficiency, and that is what has resulted into our bottom line figures. As far as diesel is concerned, April to October, of course, was a negative figure. But November had been quite good. November is showing almost a growth of 9% in diesel, which is quite a good growth. And LPG is showing almost 25% growth. So overall, petroleum products showing a 10% growth. But I would like to mention to you and to your viewers that it is a combination of two factors. One thing is the last year, Diwali was in November. This month it was in October. Also, there was some pricing related issue, that there was a likelihood of pricing going down on LPG at least. So there was a lower growth historical number on November, which based on that base, it shows good. But that does not take away the fact that the diesel growth is quite good. 9% diesel growth coming from a negative, I think it is a good sign for the market. And if I understand clearly, of course, we need to see the details, but even the auto sector has been showing some positive sign of two-wheelers uptake, etc.
Mr. Surana, the value of your plant and machinery is estimated around 51,000 crore rupees, while the market cap of the stock is at 41,000 crore rupees. So you would agree that, this is meaning that strategic value is not really coming out in valuations that the market is assigning to you.
Maybe two things. One thing is the value of the joint ventures, etc., which we have has not been fully factored by the market, because those are not the listed entities. And the second thing is that the people overweigh the impact of transportation fuel, that is MS and HSD, in the total valuation, and there always remains a concern in the mind of the investors. But actually MS and HSD constitutes only a portion of the total business of the company, and the others are not impacted by any regulatory events at all. So slowly and gradually market is realizing that, and I'm sure that the market will be able to factor in the right valuation for the companies.
Well, follow-up question, it's nothing to do with HPCL, but I'm just looking at the broad framework. The broad framework is that BPCL will be sold. Today, tomorrow, this month, next month, we don't know, but eventually it would be sold. For any buyer who's going to be a private sector buyer, they would like to get clarity on the fuel policy. The fuel policy in India has been stable, but every time when crude has gone up and down because of political compulsions, there has been a compromise. But if one works with an assumption that BPCL will be privatized, so can we safely assume that BPCL privatization is also a signal and intent of the government that the fuel pricing at retail level will be independent?
I think the intent of the government has been there for quite some time, that the fuel market is independent and decontrolled. And if you see, largely the MS and HSD prices had been moving in the direction of the international prices on a daily basis. Now, a perception of the market, whether it's moving in the same direction or not, that is a different issue. But otherwise, largely the domestic prices are aligned to the international prices of petrol and diesel on a rolling basis. So it may not be a day-to-day basis, it is day-to-day change, but with a 15 days rolling average.
Let's also talk about where, to your mind, the basic energy and the fuel demand in the country is headed. You know, we can't, slowdowns happened last year, it may improve this year, it may not improve next year. But on a 10-year basis, that's how you plan the refining capacity for HPCL, the total consumption which would be required, given that electric vehicles are also coming down. How do you see the diesel demand growing?
See, if you see the past few years, the total demand of the petroleum products had grown in the range of 4 to 4.5%. Diesel demand has grown in the range of 3 to 4%, and petrol has grown in the range of 7 to 8%. If you see even the current year, the petrol is growing at the range of 7 to 8%. Diesel had been negative so far, but the November it has come positive. Now, if we see the overall scenario of the country in the energy demand, I think it is a well-known fact that India is growing at a fastest pace as far as the incremental demand of the energy in the country is concerned. India is going to be the third largest energy consumer in the world, and in the next, let's say by 2040, the total share of the energy demand of HPC of the country will be double of what it is. Right now, it is around 5% of the world consumption, it will become around 11%. If we consider these all factors, and actually it also considers the impact of the technological disruption which may come in, which includes EV, which includes renewables, which includes other forms of energy which may come into the system. Now, if we assume that this is true, and that is based on the various predictions which has been made by multiple international and national agencies, based on that, the total consumption of petroleum products in the country, which is in the range of, let's say, 220 million metric ton, it is likely to go to almost double. It will be around 400 plus million metric ton by 2035 or 2040. Now, if we need to cater to this, and in this total energy consumption, oil and gas sector continues to be having a share of around 30% to 31%. If we assume that is right, then the country needs the refining capacity, country needs the marketing capacity, and therefore it is imperative for investment in the refinery and the petrochemical sector. The petrochemical is growing almost at higher than the GDP number. That is the way it happens. The per capita consumption of petrochemical in the country is 1/3 of the world average. It is around 10 kg per capita compared to around 30 kg per capita in the world. So while earlier we always used to consider only the petroleum products as the main thing to plan our refinery investments, nowadays every new investment which is planned consider petrochemical as an integral part of it. That's why our new refinery, let's say Bardmer refinery, is coming with a refinery cum petrochemical complex right from inception. It will have around 2 million ton of petrochemical products. Even the existing refineries are getting integrated with the petrochemical complexes with the brownfield expansions. Now petrochemical integration, one way it improves the margin, second thing it provides an hedge against any technological disruption which may likely to come on the transportation fuel side. So if we see in this overall scenario, while at one end, based on the data, based on the analysis, based on the prediction, there still is a demand for the petroleum products in the country till at least 2035, going up to 2040. 2035 to 2040 is a prediction that the oil demand may peak, but before that it will continue to grow, and more so in India because of the large demography, large population, younger generation, upwardly mobile middle class, and the various policy decisions which the government has taken to boost the economy. So I think that is irrespective of a lot of discussions on the alternative forms of energy, country will continue to need all forms of energy to meet its demand. In that, oil and gas sector will continue to play an important role, and we will need a growth on the oil and sector, while a part of the incremental demand may come from the alternative sources. In that, EV may also one of the factors, but it is still a long way to go, considering the convenience, considering the infrastructure, considering the cost, considering the acceptability. I think EV is still a long way.
Okay, Mr. Surana, great to have you on the show with us. Thank you so much for taking the time out and speaking in today.
Thank you so much. Thank you.